Welcome to the deep dive. Today, we're really getting into the story of CATL, the world's biggest battery maker.
That's right, and we're using a great piece from The Economist to guide us. It's very current, May 2025, timed just around their big Hong Kong listing.
Exactly. And it's fascinating, isn't it, how this giant company kind of emerged from what the article calls an unassuming company town in China.
It really is. What we want to do today, for you listening, is unpack how they got so dominant, so fast, and crucially, what their plans mean for, well, everything related to EVs and energy storage.
Okay, so let's start there. Ningde, the hometown. The Economist makes it sound like maybe not a backwater, but certainly an industrial place transformed by CATL.
Completely transformed. I mean, the comparison they make is pretty striking that Ningde's economic output is now comparable to Estonia or Uganda.
Wow. That puts it in perspective. Just one company driving that kind of national level output.
It really shows the scale we're talking about and the local impact.
And the speed. Founded only back in 2011. That's what, 14 years?
Barely. And now, powering about a third of the world's electric cars. And a similar chunk of the big grid storage systems, too. It's phenomenal growth.
So how did they do it? What were the kind of key drivers behind that explosion?
Well, a few things. Being in China early, as the EV market just took off there, that was obviously huge, a massive head start.
Right. Timing and location.
Definitely. But also this relentless focus on scaling up production. I mean, the numbers are kind of mind-boggling. 11 manufacturing sites just in China.
Okay.
Covering nearly 20 million square meters. That's huge. And over 100,000 employees.
Good grief. That's not just a factory, that's an industrial ecosystem.
Exactly. And that scale gives them massive advantages, economies of scale in manufacturing, buying materials, everything.
It's not just the scale of assembly, though. The article mentioned vertical integration, owning mines, even a wind farm.
Yeah, that's a really key point. They own lithium mines providing the raw material and an offshore wind farm, presumably for power.
So control from the ground up, literally.
Pretty much. It helps them manage costs, avoid supply chain shocks that hit competitors. It gives them a real edge in stability and pricing.
Okay, let's talk money then. That recent Hong Kong listing, $5 billion raised, and the price jumped 16% on day one. Investors seem keen.
Very keen. It signals strong belief in their future growth, especially their global plans. That $5 billion is earmarked for helping build those overseas factories.
Even though $5 billion is actually kind of small compared to their total value, right? Like $160 billion market cap.
It is, relatively speaking, but it's crucial strategic capital. And look at their performance revenues were down 10% last year, which sounds bad. But their net profit increased by 16%, a 14% margin. That's really healthy.
Especially when you compare. The article mentions LG Energy Solution actually posted a loss.
Exactly. It just highlights how effective CATL's scale and probably that vertical integration are at keeping costs down and profits up, even when revenue dips a bit.
So who are their main rivals then? Is anyone close?
Well, the closest in sheer battery volume is probably BYD. But BYD is different because they're also the world's biggest EV maker, so they use a lot of their own batteries.
Right. They're their own biggest customer, in a way.
Yeah. CATL is more focused on supplying batteries to, well, almost everyone else, a much wider customer base.
And that brings us to global expansion. They've clearly got China sorted, but the article says something like 85% of all battery production is still in China.
It's a huge concentration. So for CATL, going global is the logical next step. Diversification, tapping into new markets.
And the numbers show they're doing it, right?
Yeah.
International revenue is climbing fast.
Oh, yeah. It was, less than 4% back in 2018. Last year, it hit 30%. That's a significant shift.
And they're landing big names outside China. BMW, Mercedes, Toyota.
Yeah.
These aren't small clients.
Absolutely not. Getting contracts with those giants is a major stamp of approval on their technology and their ability to deliver reliably.
It's not just cars either, is it? They mentioned grid storage projects.
Right. Big projects in Nevada and Texas.
Yeah.
And apparently the world's largest energy storage project in the UAE. So they're serious about the whole energy sector, not just EVs.
Well, selling globally is one thing. Making stuff globally is another. They need factories outside China for that, surely.
Definitely. And they're building them. The first one opened in Germany in 2023.
Okay.
Now they're building a big one in Hungary using that Hong Kong cash. Production should start this year.
In Spain, too. A joint venture.
Yep, with Stellantis. Aiming for production by the end of next year. So Germany, Hungary, Spain, they're setting up a serious manufacturing footprint in Europe.
Why is that local production so important?
Well, it cuts down shipping costs, obviously, faster delivery times, closer relationships with those big European car makers. And importantly, it can help them navigate potential trade issues or tariffs down the line. It just makes sense strategically.
Okay. Beyond just making more batteries, they're also focused on making better batteries, right? The R&D spending sounds huge.
It is. $2.6 billion last year. The article notes that's more than 3 times what LG Energy Solutions spent.
Wow. What are they working on with all that money?
All sorts of things. Their PhDs unit, as the article calls it, looks at fundamental chemistry, but also improving manufacturing, using more robotics, working with suppliers on new materials. It's pretty comprehensive.
And they're patenting everything. 40,000 patents.
Over 40,000 granted or pending. That's a massive intellectual property portfolio. It protects their tech and gives them leverage.
And we're seeing the results, like that super fast charging battery they just announced.
Exactly. 520 kilometers of range from a 5-minute charge. That's game-changing if it pans out commercially.
Better than what BYD announced recently, too, wasn't it?
Slightly better range, yeah. BYD announced 400 kilometers in 5 minutes. It just shows how intense that tech race is between the big players.
Okay, but it can't all be smooth sailing. The article mentions challenges, particularly political ones, in the U.S.
Yeah, the U.S. seems, let's say, less welcoming than Europe right now, which is a shame for them because the U.S. is a big potential growth market.
Yeah.
It was less than 6% of their sales last year.
Why the friction?
Well, they got put on a Department of Defense blacklist over alleged military ties, something CATL strongly denies, by the way.
Okay.
And there was that incident where Duke Energy had to decommission some CATL batteries because of political pressure. Plus, attempts by some politicians to block the Hong Kong listing. It just shows the headwinds they face there.
A very different environment than Europe, it sounds like.
Definitely. And there's another potential risk mentioned. EV demand may be slowing down a bit in the West.
Ah, right. It's still growing fast in China, but maybe cooling off in America and Europe.
Yeah, consumer sentiment, maybe fewer subsidies. If that trend continues, it could affect growth plans for all battery makers targeting those markets, including CATL.
So how are they navigating these challenges? They seem to have strategies in place. Licensing their tech, like to Ford in the U.S.
That's a smart move. If building your own factory is politically tricky, licensing your technology to a local player like Ford lets you still make money and get your tech into that market, just indirectly.
Makes sense. And the other big thing is the energy storage side. That's grown massively.
Hugely. Less than 1% of revenue in 2018, now it's 16%. That's driven by all the renewable energy getting built, solar, wind. They all need big batteries to store power for when the sun isn't shining or the wind isn't blowing.
So it's a natural diversification and potentially higher margins too.
Exactly. It reduces their dependence on just the EV cycle. And they're innovating there too, like that new vertical battery system for data centers.
Yeah.
Space saving, apparently.
And they're not stopping there. Trucks, ships. The quote was, "We want to electrify whatever can be electrified."
Ah, yeah, that sums up the ambition, doesn't it? Aiming to get their batteries into pretty much every sector that uses energy.
Okay, so wrapping this all up, what are the main things you think people should take away from this deep dive into CATL?
I think it's, first, just the incredible speed and scale of their rise. Second, their deep commitment to R&D and staying ahead technologically. And third, their really strategic global expansion, mixing direct investment like the factories with other approaches like licensing and diversifying into energy storage. They're just a dominant force.
It really is amazing, isn't it, how this one company from that specific place is now so central to this massive global shift in energy and transport. That's the real aha moment for me.
Absolutely. And it leaves you with a big question, doesn't it? What does it mean for, well, for everyone to have one company with such a huge slice of this critical battery market? Think about supply chains, innovation, the pace of the green transition.
Yeah. And could we see this happen in other vital industries? You know, unexpected players rising to global dominance from places we weren't necessarily looking.
It's definitely something to keep an eye on. Lots to think about there.